So it's been a while, but here we are again with a new video. Happy New Year, everyone, because this is the first video in a while. So hope you had an amazing last year and wishing you all the best for the new year. We are back with the videos because I asked it yesterday on X if there was interest, and I got a lot of super positive reactions. So yeah, there's a reason to bring back the videos. So here we are. First video, we're just gonna look what Bitcoin's current situation is, and then the new videos coming out will be more short term, but we start higher time frame. So let's first look at the weekly and then what the structure currently is. So if we look from low to high with low, high, higher, high, higher, low, higher, high, then here we have 3 candles going down, lower high, higher high. So here we have a weekly SFP right there, and then this is the lower high that brought us to that higher high. That gave a bearish breaker structure right here. So technically we are in a bearish structure on the weekly, so that's good to keep in mind. However, what I also directly see is that if we look at what is the last move or the last demand that brought us into a new all-time high, then we can see these down candles before those candles up. So this is demand, and then we can see that price is currently holding that zone. So let's go to the daily, then refine those levels a bit to make it more clear. Then we can see here price came into this weekly demand with that deepest wick, so that's mitigated. And then locally we can also look at like what's more the daily structure, or like daily 3-day, it doesn't matter too much. Higher high, higher low, higher high, higher low, higher high. So here we also see the same, that this low brought us to that high, and we clearly broke structure right here. This was our former range, then we broke down from it, retested it, and that caused that strong sell-off. So also on the daily, let me delete it. Also on the daily we are in a downtrend, and then yeah, you can always, to make it more clear for yourself, draw it out. Low, lower, high, lower, low, lower, high, lower, low. So technically this is the bearish structure until proven otherwise. So that's on the daily. Then we can zoom in, let's go to like 12 hour. What happened here? Lower high, low, lower high, lower low. Here we left some supply behind, so let's just mark it out to have some levels on the chart. Big imbalances, so that showing a clear strength from the bears in this zone. Also good to keep in mind. Then what happened, for example, in this low. So price tapped the weekly demand, we know that. This is a naked low, this is a low that's not tested anymore. So mark it out, because naked lows, especially for higher time frame bottoms, you don't often see them form with a naked low. What you often want to see is that you have this low, and then later you take that low out, and then all the liquidity below this low is taken, and then you can get a healthy move to the upside. So this low is for the high time frame not a good low. So eventually I expect this low to be taken out. Now we can also dissect this more. I always love ranges, so you can say this is your low, this is your high. Here you had 1, 2, 3 local distribution, but now this is like the main range with our range low, range high. And then what happened this week is that we took out that range high before we now are currently in that sell-off we see this week. Then also what I saw is that here we had some consolidation, strong sell-off, leaving an imbalance behind. So also here we came into some supply, which we rejected from earlier with this local 1, 2, 3 model 1 distribution, failed to hit its target and started to push higher from there. So let's dissect, let's make this a clean range, so the mid-range is gone. Let's go to the 4 hour. We know this is our range, range low, range high, local distribution. This is around the mid-range, and this is during the Christmas period where we had a lot of chop. It was crazy. I just made a post that I started to learn scalping on very low time frames. That's because what happened here was just insane chop, and yeah, there was nothing else to do, so I locked myself in my room and learned some new stuff, which is low time frame trading, which is also very fun. But yeah, what we had here is like we had BART after BART. So BART pattern is like aggressive push here with push down, constellation, push up, local BART there. Then we had a push up, constellation down, BART here, BART here, BART here, like very heavy manipulation. And that happened here during the Christmas period as well, where we just, yeah, a lot of sideways chop, not a lot of happening. So I hope everyone enjoyed their Christmas and New Year's Eve and was not trading this garbage. But then it's interesting what happened on the New Year. Let's mark it out. Here we have 31 December. And then right here, this is the 1st of Jan. So this is our monthly and therefore also monthly and therefore also a yearly open. And then we can see what happened. We had a lot of chop, and then here price has been grinding up, but not in a healthy way, because what did price do? It's just grinding up with this, and normally you want to see mitigations and then push up, mitigation, push up. Then you have a healthy uptrend with higher lows and demand levels to fall back on. What you are building right now is just a lot of liquidity, because there's nothing really to fall back on. We only created some good looking demand right here, but that got mitigated on this heavy drop and that's now gone. So what I currently see is we have a lot of liquidity right here, but we are also creating quite a lot of liquidity to the upside. So quite an interesting level we are currently at. Let's make this a mitigation. Let's delete this. And then let's zoom out a bit. Because if we look at, for example, the value area from this high to here, then we can see that we currently are accepting back in the value, in which you can say that this is potentially the deviation above. Currently retesting the value area, so potentially little bounce, and then a move back to the POC is normally what you have with your range, deviation, POC, value area low, potentially. What adds weight to that is that we have a very bad monthly low. Let's look at the monthly, and then let's say the last 7 years of data right here. And we can see 91% of the monthly lows form after January 1st for, so like the current monthly low is in the 4th hour of the month, which is very early. And then we can see 100% of the monthly lows have a bigger wick. So there has never been in the last 7 years a monthly low or monthly candle that has this tiny wick. So let's go to the monthly. There you can see, let me delete that for a moment. You see how tiny this wick is. That's very, very uncommon. If you look at the history, you can directly see wicks all over the place. Like every candle has quite a lot. Here you have a very tiny one, but beside that, every candle has like very tiny wicks, and then often they get taken out very quickly. So that's what we currently have. There's the monthly open back. So very likely that eventually this month we will take out that monthly low. So that's also a reason why we have a bad monthly low with a lot of liquidity here. So eventually I expect us to trade to this level. Now the question is, when do we get there? Because we can also first get a huge bounce up. However, if we look more locally, we had a clear uptrend, but we were clearly trending up, high low. That one needs to be here, but you get the point. This is the clearest structure you can find. Oh, and then that was broken bearishly right here. Bearish boss, delete this. Price broke structure, came back in supply, sold off. So what I currently see is we have a very strong weekly high as well, which is this one, put in on Monday. Then on Tuesday, we came into supply, took out liquidity, then very strong sell-off. Price bounced, lower high, strong sell-off. Here we see price left behind some supply. So those are levels you can look for potential lower high formations. There, then you see locally you have, so what you currently have is structure, this lower high, and then you can also internally look at the structure, low, lower high, here strong sell-off again, so that's new supply. So that's also what I always like to mark out, because those levels are places you can look for the lower high formation. So here you have supply, here you have supply, and then here you don't have super clear supply anymore. This is mostly all liquidity. So if we get a bounce, we are currently at the crucial area, and we just swept our low during New York. So I expect that this could potentially be, let's see, SFP, the bounce potentially taking out all this liquidity, right there. But for that, I want to first look at structure. So what is our hourly structure, for example? Hourly structure, let's go from high to low, low, lower high, lower low, lower high, lower low, lower high, lower low. So this is let's say horizontal, and then just mark it out, hourly structure. So on the hourly you want to break that, and then you have a hourly bearish bullish structure. Then you can also look for 30 minutes. Where is clear structure I can find? Well, I see we have high, low, then we have 3 candles up, and here we SFP the low. If you SFP the low, that's bullish, because if you look at local structure, which is now the 30 minute on the time frame we are on, then you can see low, lower high, lower low, lower high, lower low. So the objective of this high was to break this low. It failed to break this low. So now the targeted level is this high, which you can see price is currently already traveling towards. Break this high, so get a close above this high, and the former high becomes a target level, which is the hourly structure. Break that, and you are already back at your supply levels. So that looks pretty good. So let's say this is our SFP. Then I like to see what are the different time frames telling me. Here at low, lower high, this is the first potential internal structure break. It's an internal structure break. If we can break that on the 30 minute, which is our current, it's closing in 1 minute, so that's interesting. If we break that, then technically this becomes our next targeted level, and we are creating some demand in the process. Look, you can see internal structure is like this: lower high, lower high, lower low, lower high, lower low. Here you have sellers, buyers taking over. So basically now this whole zone becomes demand. But what I like to do is to see in this leg what is the most local demand. And we have a super clear demand zone right here. So let's delete this. I hope this video is not becoming too long already, because in the past when I was making videos I thought it has to be short, but then in the end I'm just rambling. So we now have our 30-minute break structure. So according to that, you can look for a lower high, higher low, for a higher high, and then potentially target all this liquidity. And then I think we are forming a lower high eventually, either in this zone or in this zone, and then go back to the lows again. Why? Because we have bearish stats on the weekly. As said, our current weekly low is on Thursday. It's a very, very unlikely day in the week to put in the P2. Our current P1 is this high on Monday, and the current P2 is this low on Tuesday. So it's very likely that this low eventually gets taken out later in the week. My best guess right now would be that it's on Sunday. but let's see. Then more locally, let's say we want to get into longs. Then I would say watch this 5-minute order block that was created. Potential structured move into here, local structure break right here, and you can take a long right here, stop loss below that last low, or if you want to be safe, below that demand zone, and then you can look for the reaction towards that hourly market structure level, and then you want to break that structure, because every time you SFP a market structure level, then technically the other side becomes a weak targeted level. So you want to see closes above that level. But yeah, right now this would be my game plan. I was in a short, which I took this morning. Where was it? I was in a short right here, I think. Yeah, stop above that high, and I targeted, main target was that London low right here. That got taken out during New York. And then I left a small run in case we nuked lower. But yeah, we didn't nuke lower. We SFP'd this low and then bounced. So it was still a nice 3R. I took like 75% out. So still a good win. And right now we see buyers stepping in after we took this low. So yeah, I think locally longs make sense. But eventually I think a lower high for a lower low is the most likely outcome. So I'm setting some alerts right there to see if we get some structure to work with to enter longs. So that's my current view. I hope it's clear. If there are any questions, let me know. I'm happy to be back with the videos, and I was honestly surprised with all the positive reactions. So always show some love with either a like. It can just be a like, or a comment is also is even better. But like just a like towards this video or something gives me yeah, let me know that people value it, and then I get a lot of energy from that, because otherwise it can feel like you're doing it for nothing, and that's, yeah, energy draining, and I love to see good energy towards the posts, and then I will make these more often. So thanks for watching again, and more videos will follow. Cheers.